Hi everyone, today is 9th of December. We'll start with BTC at a 4-hour time frame. Okay, so what we see here on the top is consolidation. This is very positive. So this is the first leg, a tiny one, some consolidation, then another leg up, a large one, some consolidation near this resistance level, 39,000 range, and then a move to up to this R4. As you could see, this is because this is resistance, there was some congestion. Yeah, that's what it happened. So as I mentioned earlier, when you see resistance, don't think it's the end point. Never think about it. That's assumption. There are three behavior I mentioned about it. First behavior is where near that resistance, it struggles to find a upside move, but it can be short term, like few candles, like what we saw here. Saw here, and then shoots up. So this is number one. Second is sometimes there is a retracement, but retracement may not be deep enough, which will cause an issue. So you see that one as well. And then of course, uh, the third one, which is like the correction is deeper when it goes um, deeper and below the immediate support. So that's how. So if you look at this one, this is another consolidation, and that's very positive. So we can draw a box like this as we do many times, define the boundary just for visual clue point of view or visually. Yeah, this is how it is building up at this moment. We put in an orange box indicating a resistance zone. We use yellow and orange typically for resistance zone. Um, yeah, like this. Okay, so so this is positive. There's nothing to um, discuss more. If I zoom out, I see nice ramp up. You see, nice ramp like this. If you look at the curve, this is how it looks like this. Beautiful. I should not go beyond. So this is the trajectory. Slow movement first, and then acceleration. Yeah, this is getting parabolic, we can say, at a 4-hour. Parabolic at on 4-hour. Okay, so that's how it is. And then the shapes would change. Just always the patterns change. Right? There can be one quick vertical move, as you see that the next level is R5, which is 48,100. Well, roughly there will be a range here, $100 plus minus, $200 plus minus, that kind of a thing. When it reaches, you will understand because there will be some struggle. So 44K, right now it's here. So this is continuation. This is continuation. As you could see, it's a tiny. I'm just drawing it for your visual clue. Okay, maybe just to show you that how things move. This is like some congestion, some congestion, some congestion, a larger congestion compared to. And this, if you zoom out even bigger, this is even bigger one. Yeah, larger one, like this, larger one. I think this is the right way to put this larger one, then breakout, and then smaller one, larger one, even larger one. So this going, and then so it's making base and a leg up, base and a leg up, base and a leg up. So something like this could happen. And then let's say in by December end, it could touch this one. Of course, this is the happy scenario. What is not, what is inverse scenario would be if this low is broken, especially R4 range is broken. In that case, it goes for retest. So in that case, the R4 range means 41,400 becomes the immediate support. I would take this one just for safety. So this much of room is needed, as you could see. So I would say roughly for 4,100, 41,000, my bad, becomes the immediate support. And then, yeah, so even if it retraces, it touches R4, it doesn't harm anything. It just that in that case, what will happen, the curve will change like this. And the that's it, something like this in that case. So that's an alternative scenario. The best scenario, it goes straight up. Alternative scenario, it goes little down and then goes up. It doesn't matter. These are small things, right? And nobody can predict that much. Nobody can say it will go up from here or it will go up from here. It doesn't matter. And nobody can know about that. What is important is it should stay above 41,000. If not, then probably then it will look for a lower level for retest, like 39,400 on this one. So then, and even if it comes down to this level, it's okay, totally fine. It doesn't hurt anyone. Only that this thing is important. So this guy, what we have been doing, as you could see, we have been raising these levels. Remember, this risk was 26K. Now this risk is 34,750. You see, so as it goes up, we can just bump up this one, and that's how we trail it. And this is trailing, and that's the best approach I could find, trailing. Right. So let it progress, and then we just raise it without hurry. If you put this very close, then you're stopped out and goes up, and then you are out of the market. Very simple. So we have to be careful, try to learn that how slowly one has to raise stops. Not financial advice, but it's the best practice that how to trail it. I mean, there's a lot of material out there as well. So you can read about it, right? But the point is learn how to trail it. That's the thing. Okay. I have come across so many people who try to stick very close. Now, no harm. That's his or her wish. But the thing is, what if he stop out and then goes up? What if you so you have to balance. So you need stop because you want to manage risk. But at the same time, if your stop is so close, and then next day when you wake up, you see that you're stopped out in the market and the price gone up. It happened to me when I was new. You won't believe. I mean, I was always surprised that, oh man, I'm left out. Then the FOMO kicks in. It's very terrible experience. And if you don't put stop, then you lose a lot. So the thing is, the stop should be based on important levels, that what must not be broken. And then you need to know TA for that. And that's what I'm offering here. Right. So there are so many supports, but which support is important? Ordinary person would not know. But here you get that information. So that's what you get. And that it looks simple, but it's so important. You will realize down the line, those who are with me for last 6 months, let's say, or 12 months, knows that we started with 16K. We had so many hurdles, but here we are. There were points where we thought that it might retrace, but important thing is it retraced, but not deep enough. Like there was a high probability that it could retest a lower level from here, but then it didn't. It broke above, and then we raised the stop. I mean, not the stop. I shouldn't say stop, but the support levels. These supports, the warning level and risk level. So the support was not changed, remember. Only the labeling was changed. So earlier risk level was 31,000, let's say. Before that, it was 36K, sorry, 26K. So 26K changed to this one, 31,700, and then now it is 34,750. If it goes up, then this warning level becomes the risk level and so on. So see, this is how we are trailing, we're chasing. I give an analogy. For example, you are a cop, you are a police guy, and then you are chasing a bad guy, a criminal, let's say. Now, if you are too close, you get caught. That I mean, the bad guy would know that you're chasing. You don't want that. See, right? And if you're too far, then you might lose the bad guy. See? So that's why the cop will maintain a distance which is not too far and not too close. I hope this analogy makes sense. Uh, that's what we're doing. This risk and warning level, imagine a cop, police car. Price is like a criminal moving ahead. We don't want to be too close, otherwise we get caught. And then, and then he might do something, whatever. Point is, the idea is to reach to bad guy's destination. If you are caught in between, then you don't get the full potential. That's the thing. And if you're too low at the two, then the risk is higher. In the case of analogy, you risk of losing that bad guy, so you won't be able to chase. That's how. So that's the analogy. It's just analogy, just to visualize. The basically trailing stop loss. I give this analogy so visually it makes sense, because whenever, see, these are abstract subjects. These are not tangible subjects. So I try to come up with an analogy which is from our daily lives. So it is for relation. I mean, you can relate it in a better way. So when I give a different analogy, you connect. So abstract aspect becomes more tangible, more visible, and then it becomes easier to understand. So this police and bad guy analogy, remember, whenever you think about trailing, think about this. You don't want to get caught and you don't want to get lose of, I mean, you don't want to lose the trail. So yeah. And don't worry about the path. As I said, the best case is this, and then the secondary could be this. Only if it goes below 41K, then you can say, okay, now it's retesting 39K. But again, unless and until it touches this, there's no issue. Okay, so that's my point of view on BTC. Let's look at 1 day time frame if we see anything different. So if you zoom out, what happens? All the consolidation becomes so tiny. In fact, this doesn't look like consolidation if you look at it, but on a lower time frame it does. So here the thing comes. What time frame? You must know what time frame you are operating at. If you're operating at lower time frame, you're going to see a lot of consolidation, a lot of resistance. If you zoom out, then you see larger one like this one. You see, this is a larger one, right? Recently, the largest one. So this is a big one. In fact, this one is at weekly, not just daily. On a daily, you see this one, and on daily, you don't qualify this as congestion. Even this one is not. This is teeny tiny. I would not say congestion. I mean, okay, a little bit, but not much. This is congestion, right? This makes sense. This is actually more in ascending manner, but I just shown with a square, which is fine. But the larger one is this one, which is at a weekly time frame also, right? So what I'm trying to say here is, if you go lower in time frame, you are going to see a lot of congestion. A lot of congestion means a lot of traffic jam. Again, another analogy. So do you like traffic jam or do you like clean road? Answer me virtually. I'm just saying. Just ask yourself and answer to yourself. Okay. So when you read this, I mean, when you listen to my video, ask, do you like traffic jam, right? And so basically, you're going to see traffic jam in, I mean, resistance, right? In terms of trading or investing, whatever. When you operate at a lower time frame, and I give you the example, live example. So when you zoom out, let me hide the drawings. Do you see any congestion here? No, but we have seen it where when we go lower at 4 hours. So if we go at higher time frame, let's say 1 week, do you see any congestion? I don't see any congestion. I see straight line. I see straight line. Do you want more clarity? Change it to line view. Do you see any congestion? I don't see it. See, so that's the point I'm trying to make. Do you see congestion? This one, a big one. and some here. There's nothing, nowhere else. This one straight up, congestion, straight up, congestion, straight up. So point is, as you go higher time frame, you see less and less congestion. If you go in a lower time frame, you see more and more congestion. And more congestion means more and more confusion. Congestion is confusion, right? Because it goes up and down in some range. When you go lower in time frame, then you are going to see more congestion, more, that means more confusion. More confusion means more frustration. More frustration means probability of taking wrong decisions. This is a sequence of event. More congestion, more confusion, more complexity, and then the probability of taking bad decision because out of frustration. Simple. This is psychology. This is not even TA, you know, but I'm connecting the because this is psychological game, by the way. So you need to know TA, but to know the supports and resistance. But this is a game of, this is psychological game. So those who are psychologically strong could do better than someone. So, and those who are, when I say psychological, means not driven by emotions. I'm not saying emotionless. That is for, so emotions are required only in relationship. People use emotion in a wrong place. Okay. When you have to take a hard decision, emotions do not help, they hurt. It's very important being human. This is what I learned and experienced. I lost trades, I made losses when I was new, and that teaches me. Right. So we need, so everybody makes mistake. I would say I have made all possible mistakes. Because I have made all possible mistakes, I know when I try to make wrong decision, it reminds me wrong mistake of mine from past, and it stops me. And that's what we have to do. Our past mistakes must tell us that you are repeating the same thing. Stop it. Your inner self should stop you. Then you become a better TA. I mean, better trader, better investor, and why not better TA as well one day. So that's the point. But the point is, we have to learn from our mistake, not too afraid. And the mistake should be smaller. And how, when you will do smaller mistake means when you don't leverage, when you don't leverage, when you put stop losses, when you don't go with aggressive position. These are the few fundamental things, or you can say basic trading rules that anyone can advise, not just me, anyone. In fact, you will be able to advise to someone after making mistake, because you learn only when you make mistake. Some of the things in life also we realize. For example, to be honest, if you talk about my personal life, people say the health is wealth. This is the saying for centuries. Uh, okay, we don't deny. There's difference between acknowledging that, okay, makes sense. But making sense is different than experiencing. Because when you face any health issue, when your family is facing health issue, you really feel what is the meaning of that saying. So understanding logically is one thing. Understanding logically is one thing. And experiencing is altogether different thing. Because the experience changes you totally. So from believing, when you say logically, you believe it. You have to go beyond believing. You have to be in the state of that mind. It should be in your nature. Once it is in your nature, that becomes obvious. Then it becomes natural. When you take decision, your risk management becomes natural. You should not be believing it, that it makes sense. No, you have to go beyond make sense. Yeah. When you have experience, you don't say it makes sense. For an example, very simple, ordinary example. When you are thirsty, drink water. You feel good, right? You. So it's not that you believe in, you know it. So experience is a once you are experienced and then you see the proof, then you operate at a knowing level, knowing, not believing. Most of the people are still in believing mode. I trust you, I believe you. These are very shallow, or I would say very fragile way to expect you. These are not so strong, so to speak. Believing is means you are not convinced fully. You have to so basically you have to have some experience, and those experience should not be very severe. And when that is possible, when you are not aggressive, as I said, don't leverage, don't go for very fast moving coins when you're new and inexperienced. I mean, can you imagine someone who doesn't know driving and try to be in a Formula One? Can you imagine? That is like leveraging without experience. Not only that, can you would you drive on 60-mile speed limit when on a day one of your driving lesson? No. That is like handling alt coins, like fast moving coin when you're new. If you're not doing with driving, why are we doing on trading? I'll tell you why. There's another psychological reason. We do because there's a physical danger. Our body is very good because the body and the mind are two different things. When I say body, means the unconscious side of the point of the mind, where which so if you are near the fire, it pulls your hand. It doesn't ask you. It's not about thinking. It's about doing. It happens. We say it happens. So when the risk is about the physical risk, when it's about existential risk, then there is no thinking, there is action. You are not going to think about it. Happens. If I say jump off the cliff, you're not going to think, you're going to say no to me. It's not out of thinking, it is inbuilt, it's wired. So I'm trying to talk about risk, and there are two categories of risk. One is existential risk, and another is when you lose something like a non-material thing. So what happens when you do the why people lose? I have studied this and also experienced it. Why people lose? So if I say jump off the cliff, you don't. If I say on day one, if you're driving, you'd go and drive at 60 miles per hour on highway, you won't, because you know that you might end up hurting yourself. That is because there's existential threat, and it is not about the mind. It is about the unconscious side of the brain, and that's why it prevents you to do such silly things. But when it comes to trading, it's not about unconscious thing. It is the nature of the mind, which is greedy by nature, ambitious by nature. And sometimes it makes certain steps which are risky in nature, but doesn't stop you. So that's why you need methodology. That's why you need risk measurements. That's why you need contingency plan. All this risk management in general, basically. And that is through proper stops, proper sizing, all those things. That's why I include it. So TA is not one thing. You cannot win the trade with TA alone. Why I say so many things? Because you need all these things. So um so the risk in trading is mentally, it's all mental thing. That's why psychologically it's very important that you have rules. Your trading should be rule based. I'm not saying my rule, but your rule, anyone's rule, doesn't matter. But it must be rule based. You should act like a bot. You should not be driven out of emotions, not be out of opinion, not out of belief. Don't do that. In my point of view, don't do that. Go by your rule. Go by the rule that works for you. Then you will see one. Then you see. And when you make mistake, that mistake must become a rule. Why? Because then second time, when the situation comes, similar situation comes, that mistake will remind you, because that is part of the rule, and that rule will not allow you to make the same mistake. So all your mistakes, basically, you convert them into rules. You see the point? All your mistakes becomes your rules. And if you don't do, that means you are lousy. Sorry, I'm not trying to attack personally, but then you're lousy. You're not fit for trading. Let me be direct because I want to be direct. Why? Because I sometimes worry that people make same mistake and lose money for no reason. So I let me be direct. Let me be straightforward, even if you find very offensive. I don't mind. I'm not trying to insult anyone, but I'm trying to say the truth in a straight way, naked truth, right? If you are making mistakes twice, that means it's not a mistake. It's your habit, a bad habit. Okay. First mistake is not mistake. It's a lesson learned in my dictionary because you're not aware. So if you fall down when you learn walking or cycling, you're not doing purposefully. It happens. But when you know what causes the fall and still allow you to fall, that's not mistake, right? That's a suicidal tendency in short. That's a tendency of hurting yourself, basically. And that person may not last long in trading. Okay. So all your mistakes should be once, and all your mistakes should be your rules. Okay, I said enough. I hope you find useful because we started with different point, right? Time frame, making rules, and all those. I hope these important points will improve your planning, improve your execution. That's my intention. So I was looking at 4 hours, and you see 4 hours, as I said, more noise, more congestion, go higher, and you see lesser congestion, lesser headache. Your straight line, some congestion, tiny one, right? Like this. Okay, so one day it looks very good. There's nothing to doubt about it. So it's rock solid. Let's look at weekly now. Weekly, now it has crossed the blue one. Very good. Cross the blue one. Okay, so what should we do next? See, remember, this is not about specific dollar number. This is about some uh miles ranges, I would say, not specific dollar number. It's about milestones at a higher time frame. So we'll give you some different color. Yeah, we'll give some different colors. Gosh. So this is another junction. Yeah, see how it is moving nicely. Once it is up, what is the next junction? It is going to be 60K range. Simple. So this is how it is progressing. Now you can say that on a, from an, in a lot and from a lot larger scheme point of view that you don't want it to break below 38K from a larger uh, scale point of view, correct? So some people, if let's say hypothetically, if it starts going down, if you don't do anything, and if it goes here, that person regrets. If it goes even below, hypothetically, because it happens sometimes, what happens. So point is, supports need to be used. They are not for just seeing them. You have to use them wisely. You decide which makes sense. But you see how is this? These are like stepping stones. Earlier we didn't put this one. Otherwise, this one also a stepping stone. This one, this one, this one, this one, and next is this one. I'm trying to make it simple, and I always try to make it simple. There's no fancy thing required here. Some people chart like they're like spaghetti. And there's so many lines and so many curves and objects, and oh man, sometimes I don't even feel like spending a second. Wait, chart should be very simple. Sometimes you couple of lines are good enough. Now, in fact, I can remove this. We don't need it. I can remove it. So what we are left with, I can remove all this because we don't need it. We have achieved. I will keep this one as a reference. what we are doing is, this is the line, this is the path, a big one, this is the recent past, and this is the next one. This is it. What else you need? You don't need anything. This explain everything. But sometimes, you know what, if the vanilla ice cream is very plain, for an example, you know, but if you have some mixed dry fruit or something, then it is interesting. Sometimes people think, oh, then you more stuff is there, so more toppings are there, then it's more rich. Vanilla ice cream is plain. But the point is, I like vanilla ice cream. Okay, I'm just kidding. What I mean is, simple the better. Yeah, it's about clarity. You don't need a lot of toppings. No need here. Okay. I'll revert back just because we want to keep this for reference only. Still, this is clean chart. Let's look at other flavor that we have set up for configuration we have. So this is broken. So you see, this was the trend. Now this was the resistance. This is broken, right? So we don't need to keep this. We don't need to keep this. This is there. I think we can remove it. We can remove this one. This is taken care. Ah, we, I'll just keep this for reference because now this has become support. That's why. What else I can see? What else I see? Yeah, I think nothing else. What we saw in the previous setup is good enough. But that's it for BTC. If you look at quickly how the monthly looks like, let's look at monthly without drawing. It's absolutely awesome. When you look at monthly, there is only one congestion. Remember, there's no congestion. Going back to my earlier point. So you have to decide how much you want to get frustrated. You know, if you want more frustration, go lower and lower. Simple. So what do you want? More frustration or lesser? Okay, you know the answer. We all know the answer, but still we end up in low time frames sometimes. That's human mind. Okay, so we have to deal with it. Okay, now this is fantastic. What else? So this is approaching this level, and once that is, then we're talking about previous all-time high, isn't it? But yeah, we had to go step by step. Hmm? We had to go step by step. I'm not a person who talk about extreme levels. I do have extreme levels, but I don't talk about it. There's no need to talk about it. Even if you think about 100K, 300K, what difference is? It's just placebo. It's just feel it's like feel good factor. Okay, but it's harmful actually. It's harmful. You won't believe it. Being in the neutral state is the best state. Being in the exciting state is not a good thing. Excitement is not good. It's good. I mean, in fact, if you are if you remain excited for a very long time, it actually hurts physically as well. Excitement is only good for moment, right? If there's a birthday, you enjoy. If you get promotion, you enjoy. But you cannot continue with excitement, and that's what is actually problem with the bad habits. You can study more, whatever I study. Those who look for continuous excitement and when they fail to do so, they get addicted with things because you cannot practically get excitement every moment. Excitement comes in packets, small packets. In fact, there is charm. The gift has charm because it doesn't happen every day. That's why gift has importance. Just imagine every day someone gives you. I mean, there's no charm. If you give a gift to a kid, that there is charm because that kid is waiting for that thing to happen. People like Santa. I mean, the kids like Santa. I mean, the psychology is observed at every age, different age. Kids like Santa because Santa comes once in a year. If Santa comes every day, nobody's going to look at Santa. I'm telling you, this is psychology. So excitement is good only in bits and pieces. So don't, some people try to remain in that thing, oh, 200K, 300K, 400K. No, no, no. Neutral, neutral. Enjoy. This is awesome. This is awesome. Next is this, next is that, and so on. That's good enough. Because if you are biased towards very high level, it's very difficult to change your mind when it goes down. It's very difficult. I saw people when it started retracing, they were not believing because they were in mindset of 100K, 200K, 300K. They were not believing that it's going down. So that's what happens when you are firmly believe on something. It's very hard to change your opinion. So in trading, even in personal life, extreme side very dangerous. Anyways, so coming back to our reference data, let's look at some reference data on weekly. Right, these are reference data we always look at. So it has the 10-year yields have touched the support. It's trying to bounce. We have to see. We have to see how far it goes because there's always going to be bounce. Remember why? Because it's a support. So this is a retest of breakout. This is called throwback. So this is retesting the breakout level. So it has returned back. So if it recovers from here, that's not good. So bounce is fine. Bounce is not going to hurt. And in what case, if the inflation do not go down, so Tuesday is inflation day, remember, don't forget that. If the inflation numbers are high, this is going to shoot up without any doubt. This is going to shoot up. If inflation in the US comes out to be high, in that case, then there'll be impact, negative impact on crypto, right? So we'll have to see how much. And that's why we can anticipate some events, but we cannot just live in that. Reality is this. Reality is everything is fine. That's the reality. If something worst happens, you need a risk management plan, but you cannot assume risk. If you assume risk, it's not. I mean, if realization of risk, uh, I mean, you have to have a plan for the risk. What I'm trying to, you cannot live your life in a risk or fear. That's what I'm saying. Some people do. Some people fearful. Hey, it's going to fall. Hey, it's going to fall. Hey, it's going to fall. That's not how it works. It's not falling, but when it falls, are you ready? If answer is yes, then why to think about fall? Because you have to think about what you will do about the fall. You cannot keep thinking about the fall. See the point. We do think about fall, but when we think about what we will do if it falls, that must be in your plan. And when it falls, you're not going to think why, because you have already thought about it. When it falls, there is no thinking. It's execution. Thinking is now. So you have to think that, okay, this is my level, this is my risk tolerance, this is the support, this is my stop. That's thinking, that's planning. Let's say it continues to go up and does well, our crypto. That plan may not go through. Fine. But what if there is something bad happens? You're not going to think when it happens. You're going to execute it. Like for example, you have some kind of a firefighting device in your home, let's say fire extinguisher. You're not going to buy that fire extinguisher. You're not going to go to a shop when there is fire. You're going to have that fire extinguisher in your home, or exit plan in your home. You're not going to draw your exit plan when there is fire. You see my point? What we do in our daily lives, we just have to do the same in trading, but we don't do. Many people don't do that. They think about what to do when it starts falling. That's not the time to think. Why? Because your mind cannot be 100% stable. Can you imagine taking rational decision if your house is on fire? Can you believe? Can you be calm? I don't think so. You are all you because then the subconscious mind is taking the decisions. You cannot be calm. You are rushing here and there. You would forget to think, pick up things and so many things. You have to have plan. If there's fire, what bag you are going to take with you? For example, what is the most important thing in your house that you want to take out? Don't you do that? The same thing is here. You have to know which item you are going to pick up, mm, and what quantity, at what stage. And that must be known, that must be documented. So when that situation arises, you're not going to think, but act. There's no thinking there. I hope I'm making sense. And I'm sharing so many things like this because you have to understand that TA is one thing, but these are the things which makes the complete story. TA is partial story, not a complete story. So this platform is not just TA platform. It's about educating to make you a better trader and investor. This is like uh, this is like I'm focusing so much on other areas. Anyway, so I think let's move on to Nasdaq and see Nasdaq is fantastic. This resistance was still fantastic. Let's look at DXY. Let's look DXY bounce. There's no magic. There's no magic. This is support and it bounced. Now, some people think DXY is bouncing. That's why BTC is going to go down. Again, wrong thing. Assume. Don't assume. Don't assume. Don't assume. Prepare, prepare, prepare. Don't assume. Okay. So the way DXY works is it's not about one day upside move, one day up a downside move on a BTC. It doesn't work like that. It has to reach certain height. In my opinion, if it breaks above 106, then there is a problem for BTC. This kind of a bounce is not going to hurt BTC. Okay. Only if it crosses. And if it crosses this last resistance, then it's a big problem. Forget about crypto, but even stocks and other areas. Big problem. So yeah, we don't want to. We don't want to see that. But point is, this bounce is not going to hurt. So it is going to bounce, as we know. I mean, we had mentioned this earlier, and it is happening, right? So that's not a big deal. But remember, and what if the other side, if it breaks below support, means it starts going below 1 or 2, then it's going to be tremendous boost on a crypto side, tremendous boost. Remember, so think from both the sides. Always think from both the sides. Don't be biased on one side. Of course, when you take trade, you have to be on one side. And if you're long, then you have to stick to your trade. But when you think about what might happen, you have to think from both sides, from a planning point of view. So for an example, if it goes down and also BTC goes up, then you will think about adding more money, for an example. If it goes down and then breaks some important supports, then you may think about reducing your position. You see, so you should have planned for both happy scenario and sad scenario. When to add money, when not, when to reduce money, when to do nothing. It must be on your paper. If it is not on your paper, you're not good investor. You're not good trader. If it is not on your paper, remember. Sorry, I want to be direct. Okay, dominance is still solid, but this could be a double bottom, a double top, potentially. I cannot announce it right now unless it breaks below. There is one more resistance on the higher side around 56, around 56. But I think Bitcoin, the alts are getting stronger. I can clearly see that. I see more money flowing into alt for sure. Even the ordinary coins are also getting some money. So looking at this scenario, this range could be the range where BTC stop moving up. BTC dominance, my bad, not BTC. BTC dominance could stop. It simply means that it doesn't mean the BTC is going to go down. It simply means that the more money is going to flow into other coins. That's the simple interpretation, right? It doesn't mean the BTC is going down. Okay, it's about dominance. Okay, so that's enough. I think I said so many things, so much very important points. I hope you find useful, you know. That's it. So I'll end this session and then we'll go for next session, go through swing coins all. So let's do that.